Tech titan Cisco Systems has a lot of cash, or cash, as Cisco CEO John Chambers would pronounce it. The company using some of that cash, $5 billion to be precise, to buy a company called NDS Systems. This is a privately held firm that makes software for set-top boxes and other video delivery systems, so they have a lot of media partners. And this is a very interesting deal because I think it shows Cisco is still committed to the consumer and the video business, and a lot of investors had been hoping Cisco would backtrack from the consumer. That's after the company announced some layoffs last year. The company also announced it was killing its flip video camera business that it had acquired. So what does this mean for Cisco stock? Fortunately for any Cisco investors, shares are only down a little bit in early trading Thursday, but the trend bears watching. If Chambers is rediscovering a love for acquisitions, that could be a bit worrisome, especially since people really want the company to focus on the core business of routers, switchers, other networking products that big businesses, big telecom providers, and even big governments buy, as opposed to the average consumer like you and I. Now, one other thing that's very interesting with this Cisco deal is who might make out like bandits as a result of it. Cisco is buying NDS, which is a private company, as I mentioned, that is co-owned by a hedge fund, Permira, over in the UK, and a little media firm you may have heard of called News Corp. So Rupert Murdoch and his company may wind up cashing in on this deal. Could be very good news for News Corp. Not that they are really needing any more good news, because strangely enough, that stock is doing quite well despite all the controversy about that little phone hacking scam.